Hello, homebuyers. Thanks for joining me today. I want to talk about whether you can include appliances in your mortgage when you're buying a home. There's an opportunity for you to do that, but you have to get creative with it. So the first thing is when it comes to a mortgage program that allows for appliances to be covered within the loan amount, the best program for that will be the FHA 203K rehab loan. With that loan, you're able to purchase the home plus pay for any rehab or updates or upgrades needed, including appliances, all in the same loan. That, for me, is the number one option if you're looking to have appliances, the cost of appliances covered within and all rolled into your loan amount. If you're interested in that program, I'm actually going to link to it right up here in the corner of this video, where you can see another video about the FHA 203K rehab loan. And also, if you'd like to read more about this topic, getting your appliances covered or included in your loan amount, I'm going to link to the actual article that goes into greater depth down below and also in the first pinned comment. So the FHA 203K rehab loan really is the only loan that will allow you to do that when you're making a purchase. If you are refinancing, you can absolutely do a cash out refinance to cash out the additional money that you need to be able to help pay for your appliances. Now, maybe you are buying a new construction home and you're having it built and you're negotiating with the builder and you're picking out things like your carpet or your flooring or whatever it is. You can likely upgrade your appliances and choose the ones that you want, and that'll then change the purchase price of the home that's being built for you. But in the end, it'll all be rolled into your loan at that point. So another way to get appliances covered when you purchase the home, not necessarily in the mortgage, but I think one of the other great ways to do this, and probably the one that costs you the least, would be to ask for a seller credit for closing costs. Okay, so maybe you already have the closing costs money that you planned on spending for closing costs. Let's say it's $5,000, for example. Okay, you were planning on spending that money, but if you get the seller to contribute towards your closing costs, let's say $5,000, then that money you would have spent on your closing costs, you can then use that to purchase your appliances. So that's one area. The other thing is you can ask for a lender credit. The lender can offer a credit to do the same thing as the seller, which is cover your closing costs. Usually, though, that's in exchange for a slightly higher rate. But you will then not have to come to the closing table with those extra few $1,000s for closing costs, and you can use that money to instead buy appliances. Now, I want to caution you, though, if you're planning ahead and you've got your eye on appliances and you haven't quite purchased the home yet, your closing is in a week, do not go and pull your credit card out and start charging for appliances. You do not want to make any of those major or large purchases before the home actually closes. It's possible that your lender will run your credit one more time before closing, and if all of a sudden you have this other big thing, this amount, large payment that you might have on your credit report, that could undo what you've been working so hard for when it comes to your mortgage approval. So hopefully that will answer some of your questions on how to get your appliances, your new appliances covered within the mortgage. If you have any questions, leave them in the comments below. Follow the link in the first pinned comment and also in the description to the website, where you can get pre-approved and also work with someone who will maybe offer you a lender credit to help pay for your appliances. Thanks for watching, and we will see you next time.